Welcome back into Crypto Smart Analyst. And today we're going to be answering your questions and giving responses to any question you have. So it's basically a question and answer and revision class. So I'm going to be depending on you to give me your feedback, basically on all the classes we've had. If there are any questions you have that you cannot really resolve, or probably you try to do some trades and it's going against you, or you did make some prediction and it wasn't going right, you probably need a clarification on what to do. That is basically what I'm going to be doing today, giving response to your questions and giving you directions on how to go about it. Okay, let me start with this. Let me start with my own question. Have you did you do any practice? Do you analyze any coin yourself?
Yeah, so I've been looking at the USDT coin because it's typically pegged at $1, and then because of what happened on the 12th of May, it's consistently traded below $1. So if we could do analysis on that, that would be really helpful.
USDT to what? USDT to USDC or what? Which one? Which pair?
USDT to USD.
USDT to USD. That's a stable coin.
I'm trading on Binance.
So this is actually, I don't expect anybody to trade on this, but let's see. This is it's supposedly a stable coin, right? USDT is a stable coin, so it is not really trying to trade a stable coin against a stable coin, right? It's the opportunity is here too, right? The opportunity is here, but I would not really advise you trading because of the volatility will be very, very low. Like you can see margin volatility is between 0.9 to about 0.99, 0.9999667. This was June 13, and the peak since then has been 0.9996, 996. So yeah, there are opportunities there, but the potential is very, very low because it is less volatile compared to every other coin that we have. This is more like you trading in boring market. Like it's gonna be boring. That's it. That's the expectation. You might try to catch this dip, but hardly will you be able to catch this dip. And if you look at the dip itself, it's just 0.9. It's not even up to $1 drop. Sorry, it's not up to, this is about 5 cents, 50 cents. Yeah, 5 cents drop. It's not even up to 5 cents. This drop is not up to 5 cents. So the margin is very, very low. So I would not really expect you to trade a stable coin per a stable coin because the margin, the volatility level is very, very low. You can see the chart right now. It's just between this range. Is mostly supposed to be within $1. So if you tend to buy this top, or let's say you tend to buy this dip here, to take you a very, very long time for you to say you want to, let's say you're able to buy at 0.9948. It will take you some days before you can even be able to sell at 0.995. And if you're going to be trading this kind of token, you need to have high volume. Like you can't be trading with $100 and be expecting something good. You should be trading with very high volume, like say $100,000 or $1 million. That's when you can really see good profits on this kind of trade. So trading a stable coin with another stable coin, it can be profitable, but it's the volatility level is very, very low. So I won't say it's a good idea. I won't say it's a good idea. Okay, so I would not. For me, it's not. I don't trade it. I don't do it. It's not like a waste of time. Even the market is boring enough for me right now. Bitcoin is boring. It's too boring for me to trade. Except that, okay, you have to trade on lower margin, lower time frame for you to actually be able to pick some trade. So if you put low capital to trade to get something huge out of it, it's going to take some time. So except you're putting large capital. So I would not advise you to trade a stablecoin pair, with another stablecoin. It's not really that profitable or that good. the first thing you should do when you get a signal is to analyze it before you pick it. Okay, there are times I drop signals. Like I was going to drop a signal for, was the kind I was going to drop today? GMT. Yeah, I was going to drop a signal for GMT today, but I already bought it before I shorted it. Yeah, I already shorted it at it was on 1 hour time frame. Yeah, I already shorted GMT at one around 1.0 around this region, right? Yeah, just around here, 1.05. And by the time I go back online, I was already in profit, and the market has dumped to this region. So I was like, should I drop it or not? So I just had to leave it because at this region, it was already the volume, the movement is already getting too tired. So it was already late for me to drop it. So I didn't not even bother to drop it at all because it's looking like it's already late.
Why did you choose GMT?
Why I basically just pick at random. Like I just look at charts at random. Sometimes I just look at the coin itself. I'm like, okay, and is that I bump on it, or probably I look at the activities on Twitter. But I look at the activities on Twitter and I realize people are really talking about this coin. Like yesterday was all about XRP. A lot of people were talking about XRP is going to the moon, blah blah blah. It's going to $1 yesterday, and I checked it out. If you look at the price movement right now, it actually did pump. That was yesterday, but the movement wasn't really that much. So I just looked at it like, okay, let me see this and analyze it, using my chart to try to determine where it could go. Then I decide if I'm going to short it or long it. And looking at XRP itself, based on sentiment on Twitter, I could see it's more or less about breaking a support, a resistance, right? This is it. It's the XRP. It was going to break a resistance, but it did not break it. It is yet to break it. Now, I talked about moving average, right? This yellow line is my moving average, is my 8th moving average. And I talked about it correlating your 8th moving average with the candlestick. Now, whenever you see a bullish engulfing or a Maribosa that crossed that either if you close below the moving average is an indication of downtrend, and if you close above the moving average, it's an indication of uptrend. If we look at what happened here right now, we had it close below the moving average. The next candle was downtrend. Then we have an inverted hammer. So we have an hammer which indicated a possible reversal. And if you look at the next candle that happened after this hammer is a bullish candle, which closes above this 8th moving average. But like I said, whenever you have to wait for once you have your indication for a reversal, you have the confirmation that yes, it's closed above it. Then you need to wait again for the 3rd candle, which is this is my major entry. So if I'm going to be entering, I'm possibly going to be entering around here, while I place my stop loss below here, below the moving average, in case it get invalidated. Because if you look at what happened right now, we have a bullish engulfing again that will happen next to this bullish candle, which indicated the bearish movement. And looking at what we had here, this was a doji. That happened on 22nd, right? It was a doji. And the reason why I actually called a short for GMT was because of this candle. It actually fully engulfed. It engulfed this moving average, my 8th moving average. When it engulfed and closed below it, I already opened here anyway, but it engulfed and closed below it. That's a signal for downtrend. And look at what has been happening. It's been going downtrend since then. So my expectation for GMT right now, this is 1 hour time frame right now. 50 moving average is not holding. The next one is actually around here. It's 29 moving average. So I'm expecting it to actually drop towards this moving average. That is 0.93. So if you remember, I opened at 1.05. I entered at 1.05. I'm shorting to 0.93. So there's a potential that is actually going to hit. And if this hits, now if you look at what I'm using as my support or as my take profit, it is the moving averages. I have 8 moving average, I have 7 moving average, I have 21 moving average, I have 50 moving average, I have 200 moving average, this 200 moving average. So I have all of them as on the chart, and I use them for prediction. I use them for predicting the direction. Like this is a day, my moving average. This is 50, 50 and 80. If I click it, you see Okay, this is 9 and 25. 9 was broken. 26 is the next. This tag, this is 50. This is 50 moving average. This is 8 moving average. So on the short time, like I told you, this is 1 hour time frame. On short time, short term, I can actually use them as my take profit region. So because it already broke my 8 moving average, that's a direction, a downward. I mean, broke it and closed below it, and I know 9 may not hold. So my next target is actually 50 moving average, because if you look backward, also the 50 might not hold, but I'm still using it as a take profit target. If you look at what happened here, when 50 got broken, excuse me, got consolidated around the 50 region before breaking back above it. So that's actually why I'm holding 50 region. This region, that's 0.94 as my next target. That is, I'm projecting that this would probably still go like this, and it may come down to hit it here. So if it hit it here and it get and this section hold, then I'll be projecting a reversal. But if it doesn't hold, then my next target is going to be around this region. Now, around this region, why am I picking 0.85? I'm picking 0.85 because 0.85 was the previous resistance. Let me show you. Let me make it glaring here. This was the previous resistance. You can see it got rejected here. The first hit, 1, 2, 3. These are the resistance areas. So I'm taking this region as my next, so my final support. No. Now, how do I take my profits? After entering a trade, when it gets to this region, I take 50% of my profits. Then I'm having 50% left, right? That's what I do. Most times I take 100% if I feel like I'm not comfortable with the direction, but I feel like it might still go down. So I just take 50% out here. I'm still having 50% of my initial trade left. Then out of that 50%, I take 25% here. Then I wait again to take the final position here. That's basically what I do to actually protect my trade. So when I say whenever you see your profits, always take your profit. That's what I mean. So you always protect the profits. Sometimes you just have to put a stop loss. You can use stop loss to take your profit sometimes, yeah? I use stop loss to take my profit most of the time, actually. Or I just take at market price and that's it. So that is basically what I'm trying to explain here. So using GMT right now, if you look at what happened here, we have doji formation. We have another doji formation indicating what? Reversal. It's red, indicating reversal. And if we look at the volume, comparing with the last class I had, if you look at the volume is actually quite dropping. If you look at the volume, right? And the reason why I said I took my profit here, when I check the volume, the volume dump is actually getting lower and lower. To compare to what we have here to the volume, is actually getting lower and lower and lower. That means the volume drop is actually reducing. So there's a potential that it might not hit this region, 0.7. It might not. So in case it doesn't, I already took out my profits. And what I did is already have another trade waiting in case it get rejected, get reversed. So basically that is how I protect my profit and take my profit here. So do we have any question? Do you have any more questions? Yeah.
So actually, I was going to ask, are you going to teach something like arbitrage trading? So yes, so you see coins that trade at a particular price on one exchange, and then you find it on another exchange which trades probably at a higher amount.
Yeah. Yes, I really do not do much of arbitrage trading, basically because it can be very risky sometimes. And if you're going to be doing arbitrage trading, it's best for you to have some good capital. Because what's the point of me doing arbitrage trading when I'm making very low amounts of profits, right? Okay, I'm going to show an example right now. I think I saw this last week. This is game star token, right? If you look at the price on Git.io, is trading at 0.17. This is actually an opportunity for arbitrage right now. Even on L-Bank, it's trading at 0.1. But if you look at the price it's trading here on BitGet, it's trading at 0.22. on Orion Protocol. Orion Protocol trading at 0.1859. So you can easily get to buy it on PancakeSwap. PancakeSwap is like the cheapest price right now. You can buy it on PancakeSwap on your Trust wallet and move it to any of these exchanges, BitGet or Orion Swap, and you'll be able to make good profits. You can see the margin here is close to about 0.0. That's about 75% profit. So yeah, that's about 75.6% profit, right? That you can actually get to make on whatever you invest on this. So you can, let's say you put $1,000 on BUSD, GameStar on PancakeSwap, and you move it to BitGet to sell there, you're actually going to be making close to about 7% because of the price margin. Now, my issue with arbitrage trading is this. Most of these exchanges do not have enough liquidity. And, arbitrage trading is all about liquidity. When it comes to centralized exchanges, some of them actually have minimum withdrawal issues. They have withdrawal fees, okay? Most of them have withdrawal fees. Most of them have minimum withdrawal issues. Most of them are not really that legitimate. That's one of the reasons why I really do not promote arbitrage trading all the time. But if you're doing arbitrage, let's say if it is on a DEX, let's say SushiSwap, PancakeSwap, and Uniswap, or any of the DEXs, you can actually do it easily because it's on the DEX. The money is already in your wallet. Or probably it's on that and it's on Binance or BitMEX on like that. And you see the price movement, the price difference here. You can easily do that on those DEXs because it is DEX. You're the one in control of the money. But when it comes to when you start involving centralized exchanges, these are challenges that comes in place that in the process of withdrawing your money, most of them will not allow you to withdraw your money. Most of them will probably are scam. Some of the centralized exchanges you see on CoinMarketCap or CoinGecko, some of them are scam. They might not allow you to withdraw your money. Okay, so that's one of the reasons why I really do not promote arbitrage trading. You can do it; it is profitable if you're good with it. So if I'm good, I've done it once, but I only do it on decentralized exchanges. Like I bought on PancakeSwap, I sold on SushiSwap with just the margin of about, I think, 10% margin. I just took my profit like that. So it is best you can do it like that, but because of the challenges and the fact that most of the people we have in the group right now, we have pro traders and the likes. Yeah, we have them, but we also have newbies, and newbies really wants to know. They really want to probably take profits quickly and stuff like that. And if you put them into arbitrage trading, they may actually get hooked or get trapped, or even end up losing because of the withdrawal fees on different exchanges. Binance has a very low withdrawal fees, but some of these exchanges do not have as low withdrawal fee as Binance. So by the time you want to withdraw it, the profit you make might have been taken off from whatever you're withdrawing. So that's one of the reasons why I really do not promote arbitrage trading for now. If you look at the liquidity on PancakeSwap, we have over $1 million here on PancakeSwap. And how much do we have on this exchange? We have on BitGet, we have only $76,000. On Orion Swap, that is even higher, we have $68. That's the volume. Very, very low. $68. And if you say you want to go and put in the volume and sell here, by the time you put in your volume, the price might have changed. So except you have a bot that does arbitrage trading for you, you have a bot that actually does that you actually integrate into all these exchanges that can do the movement of funds and withdrawal for you easily, then I will advise you to go through, you should use arbitrage trading. So that's it for me on arbitrage trading. I really know I am going to probably, I will only advise you using a bot to trade it. I've seen this margin and this price margin since about 5 days ago, but I did not take it because I'm not registered on BitGet. I didn't know their protocol. I don't know the KYC model, and I just don't create any accounts. I try to use exchanges that are reputable, that I know that at least I'm not. I can't really lose my fund. That's why I don't create accounts. I only amongst all the exchanges here, I think I have an account with Git.io, but I've never traded with them. Bank, I don't have an account. PancakeSwap, I've done transaction there. Every other one here, I've never traded on them because I can't just be moving my fund anyhow. I look at the confidence level here; it's very, very low. No confidence level, moderate. It's only on Git.io that we have high confidence level. I could only say I can trade this token because I know the people involved in it. I know the founders. I know the guys that are moving it. So probably I know, I probably can trust them a bit to trade them because I know they are kind of trustworthy. That's for GameStar. So that's one of the reasons why I could say I want to trade the token. So it's not about trading all the coins, but it's about knowing what to trade and where to trade them. Because if you move your money to an exchange that will not allow you to withdraw it, you're going to be trapped and your money is gone. Have I been able to answer your question?
Yes, you have.
Okay, awesome. Do you have any other question I need to attend to tonight? If you're going to start a car, the first thing you should know, if you're going to start any engine in mechanical engineering, sorry, that's my field, you need to know how to turn it off. That's the first thing. You must know how to turn it off before you start it. So that's why the next class, what I'm going to be talking about is stop loss, how to stop stop yourself from losing, how to protect your profit. Basically, that's what I'm going to be talking about in the next class. So after that, then we're going to go into breaking down all these trading tools one by one, how to use them, and the ones I use, the one I prefer use. I think that's going to be probably August. I'm going to talk about the one I use more often, the one I use almost all the time, and that works for me best. So I'm going to be teaching everything, but as I'm teaching everything, it now depends on you and the way you trade. Different tools actually, they work differently to different people. Okay, but from all the ones I've taught over the since last month, the ones I actually find very, very productive that I think everybody should have been using is the margin of your candlestick with moving average. This one, because it is very valid. It gives you direct information about direction of the market. We look at here right now, we have a bullish crossing. This is it. This bullish engulfing above this 8 moving average. And if you look at what happened since then, this is on GMT, right? Since this app occurred at 0.8, we've been going uptrend until close below it again. This happened on the 25th. Yeah, this was on the 25th, and we were bullish until 26th. So just within a day. So you can actually be able to predict and place your trade within a day. What happened yesterday, and place your trade, and you take a profit, and you can actually long this position on BitMEX. I did long this position. That's the truth. I didn't drop the signal, but I was just projecting like, okay, there's a broke. Let me just take the risk, and I longed in and I went offline. It was when I came back online late at night. That was when I saw it was in profits. So that was when it got around here. It has broken $1 then. So I just took my profit and shot it from here because I saw this doji. So these are things I actually use that works for me. Sometimes, yeah, most of the time. So I expect you to actually pick. So what I'm expecting, if you have been practicing, then you should have probably be able to pick some of the tools that really work for you. And I really like to get a feedback on which of one actually works for you. You really cannot know how to trade if you don't practice. That's the truth. I drop signals, but I don't advocate, I don't advise people waiting to get signals before they trade. You'll be able to trade without getting signals. You'll be able to give signals yourself based on what you're seeing on the chart. Okay. So before we head to tonight's session, very 7. We still have some time, so I'll still like to get your feedback. If you have any question, if you have any coins you want me to analyze for you, or probably you've been getting some rumor about some coins and you want me to analyze for you.
So for someone just starting out, where can I get maybe tutorials on either on the YouTube channel, or what materials can I use?
Okay, I have dropped for most of the classes I've had. Can you hear me? Hello, can you hear me?
Yes.
Okay, for all the classes I've had, for technical analysis, for candlesticks, for moving averages and everything, I've dropped materials, PDF materials on the slide I created and used for those classes. So you can watch the video while you are also reading the materials, right? The materials are on the group already. They're on this Telegram group. Then the videos are already on YouTube. So I have a section. I already created a playlist for newbies. So if you're just starting, you can go on YouTube. On my YouTube, you have a playlist for newbies. There are videos there that actually gives introductions to how to trade and basically what you need to know about trading. They are all there for you to actually study. Most of the things I know right now are not things I learned within a month or two. These are things that I've been doing over years, okay? These are things that I learned. I've made mistakes, I learn from my mistakes. If you make mistake and you cannot learn from your mistake, you're going to make the mistake again. So that's very important for you to really understand when you make a mistake or you traded at loss. You need to calm down. Like, what really happened? What did I do what did I do wrong? How come I lost this money? Then when you understand that, then you know how to mitigate it the next time. So it's very, very important. You need to learn from the mistake. And don't be arrogant when you're trading. Trading is all about being patient. If you trade and it went against you, just chill. Try to understand what went wrong. What did you do wrong? And trading is all about flowing with the market. Like, don't try to trade. Don't try to trade against the markets, and don't trade based on hope. Oh, I'm thinking it's going to get here. I hope it's going to get here. I really pray it gets here. It doesn't work that way. I put myself. There are times I have put myself in the position of actually trying to pray about a certain trade, like, God, please let it go up, let it go up. And before you know it, it's my stop loss, and I was hard to loss. I lost, right? So trading is not about hoping and wishing. Really, it's not. Trading is all about you have to. It's mathematics. It's probability. So like, it can go here, it can decide not to go. The market can be manipulated anytime. If the market get manipulated, what should I do? If it goes according to my plan, what should I do? So you need to know. It's just like driving. You need to know where you're going before you even start the car. You need to know the direction you want to turn your steering before you turn your steering. Else you just be moving on any direction on the road, and that's very, very bad for everybody that's really following you, even for yourself. You might actually end up having accidents, something like that. So that's what trading is all about. You need to know the direction you want to go before you go into it. Like this, when I saw this, I was like, oh, it's going down, and I already chill. I'm already protecting my profit. So you get rejected, you get reversed. I'm waiting for it. So right now, my target for GMT right now is at 0.94 region, about 0.94 region right now here. So in case it dumps, my last target will be hit, and I'm done. But I really, on my current trade, I did not even wait for it to hit. I just took my profit when it got here. I know it's not going to hold because hardly do this moving average hold. Hardly does. It hardly holds actually most of the time. When you have a major dump, that's the 26 moving average. 26, yeah, that's 26 moving average. It's hardly hold. So if you're going to trade, like I said, you don't need your money to trade. You can actually start doing analysis. Right? Get a paper, get a pen. Okay, I'm predicting based on what I saw here, this doji formation and this closed below the 8 moving average. I'm predicting the market's going to dump from here to here. So if you took your pen, you write the time, you made your prediction, and that was it. You went away, you go away, come back about after like 24 hours and come back and check the trade. Did it go according to direction? Based on what I've learned, if it goes according to that direction, then you're good. You can do that on multiple trades and just make prediction without your money. It is when you know that probably you made about 10 predictions and 9 of them were correct. Then you can also say, yeah, I can put in some money. Probably you can put in $200 or $100, whatever you can afford to lose. I won't say you're going to lose it, but whatever you can afford to lose, you can put it into it. Then start making that same prediction without your emotion getting attached. Don't attach your emotion. As much, because everybody you're seeing here right now, the greens and the red indicate people's emotions. They indicate people's emotions. So if you being a psychologist, to be able to understand the implication of this, what this emotion data gives you. So when you understand what this give you, then you can decide, okay, this is what's going to happen next. So based on general market emotions analysis, you can be able to determine the direction of the market on your own. Okay, have I been able to answer your question?
Yes, sir.
Awesome.
Thank you.
Yeah, you're welcome. You're welcome. So I would really like people to share their experience in the crypto space so far, what they've been able to learn, what they've lost, if they've lost something, or what their projections are, and how to actually be able to survive the bear market, right? What to do to actually survive the bear market, and how to prepare yourself for the next bull run.
Well, earlier today I was looking at BTC BUSD, trying to convince myself that we're going to have a more bear move before any other push-up. I looked at the 4-hour time frame, and I had a 200-day moving average on it, and it was already peaked at that, and then pulled down to 21,200 thereabout. So I was still a little bit skeptical of whether to wait a little further before entering for a buy or go bear. But that's just the point I was at earlier today before I stepped out. So I don't know what your thoughts on BTC BUSD from the chart, from looking at the chart.
Okay. Let me check it out from here. This is BTC perpetuals, right? And this is 4-hour time frame on BitMEX. I'm using BitMEX right now. So sometimes if you're going to do analysis, it's best for you to zoom out to really see it from afar to know what to really expect. And if you look at what we have, we've been having consolidation and dumping, consolidation, dumping. We had one here, we had one here, we had one here. Now, if you're using 200, 200 is basically used on daily time frame.
Yes. Okay.
200 moving average is actually majorly used on daily time frame. So if you're going to really project or predict what could happen, because if you look at the trend since the bear market started, and if you look at the trend, 200, this is 200 daily move. This is my own 200 daily moving average.
Okay.
Let me click on confirm that. I'm confirm that actually. Yeah.
Is that exponential?
Yeah, no, it's just moving average, not exponential.
Okay.
Moving average, yeah. So if you look at what has been happening, the market on the 4-hour time frame, the market actually been dancing around and rejecting this 200 moving average.
Yeah.
Before we had this, it got rejected, and early June also we hit it and get rejected, and I'm projecting the same thing might happen until now. Like I said, the 200 moving average is very, very important because it is the same moving average most of the the institutional traders use in trading, forex, stocks, wherever. That's what they use. So I'm actually trying to elongate it right now and project it forward. Right, this is my own 200 moving average projected forward. So I'm projecting is really going to get here. So if it gets, because it doesn't give you projections. It doesn't, moving average doesn't give you positive projection. You can only extend it to actually be able to determine what could possibly happen. So if you're using that as an analysis right now and you see the chart right now, you might actually get to test it here. This is on the 4-hour time frame, right? We get to test it and get rejected. If we were following the same trend, we might actually get to dump to, let's say, 12K before we get consolidated and now break it. That is one. But if it does hold, if we actually test it here, and we're going to be testing it here, looking at this projection, this is going to be July. Yeah, this is going to be July, and July, this is my projection for July. I don't think we're going to really reject it. But before I can make a prediction for a month, I would prefer to go to a higher time frame, like a daily time frame or weekly time frame. So if you look at, if you look at the daily time frame right now, this is my 200 moving average. This is it on the daily. So I'm making that same projection. Okay, let me leave it this one here. Let me draw another one. So if I'm making that same projection here, so it will take me, it's going to take the market to actually test. The last time it tested it was in March 2020, right? We got rejected, and that was, I think I made a projection like that. If we actually breaks above it here, like what happened here, like if we break above it, then we are good for bull run. But if we get rejected,
what price was that in March?
March was 47K.
48K
48K region, about 48K, yeah.
Okay.
So it was 48K in March, and that was when I made the projection. We checked the YouTube video. I think that was when I made the post that if we break it, then we are going to probably 50. But if we get rejected here, then it's massive bear market for us, and that was when the bear market majorly started. We've been going downtrend right now. So the same thing is what I'm going to be saying here. Though if you look at it, if you look at what we have right now, it's still the moving average is definitely it's been going down.
Yes.
Let's compare to what we have in this is 2017, right? This is 2017. It's been going down, and we have a downtrend. And this margin, I'm coming. No. Okay. So this was the last time we tested it in 2017 was we had a bar of about we have 246 days. So we project the same thing to what we're going to have this bear market. Now, if you notice, 2017 bear market is actually different from this current bear market because we tested and break the 200 moving average like three to four times. Here, 1, 2, 3, 4, 5, 6. It's actually tested 6 times in these years, but compared to 2017 bear market, we only tested a 1, 2, about 3 times before we actually have a major rejection. So we have a 146 days rejection, and like I've been saying, I said I'm actually expecting the major bottom to happen between September and October. That's my projection for Bitcoin right now. So if I'm doing the same thing, projecting the last day it was tested to here, so 140, let's do 150 days. That's going to take us to December. 146 days, that's like December 1st. Yeah, about this range. So if you're actually following the same pattern as what we have in the previous years, though I don't expect we're going to follow it, because this year's bear market is quite different. It is more correlative to what we had in 2013, but I don't think this chart extends to 2013. So if you're actually going to have that, I would expect the projections to actually get tested September. Then we might have a V bottom to now break out here, because as long as Bitcoin breaks this 200 daily moving average, once it breaks the 200 daily moving average, that's an indication for a bull trend. That's going to actually indicate the beginning of the bull market for us. Yeah, that's going to be around October. Yeah, this is it. Let's say if we get to break it around this region, that's going to be the beginning of the bull market, the bull run for us right now. So this is actually my projection for Bitcoin right now. So for now till September, October, I still feel we're still going to be bearish. We can go up and test, if you probably zoom in, you can go up and test around this region, that's the 23K, or even test 24K, but the direction is still downward. For me, it's still downward. Okay, that's what I'm predicting. That's what I'm expecting. But in case, like I said, what I'm going to be teaching in the next class is going to actually give you the direction of, in case it breaks this region, in case this 24K get broken, or in case it breaks this region faster than expected, what am I going to do? So I always put myself on two sides. So I'm predicting that the market is going to be bearish to September, October. But in case we break out before September or October, what am I going to do? There are ways to actually place your trade to even if you're not on the chart, it's going to actually get to convert your trade for you and be able to pick your trade for you. That's by using stop loss. So there are different ways to actually use stop loss. You can use stop loss to place a trade, and you can also use stop loss to stop yourself out of a trade. So I'm going to be explaining that in the next class, basically. So that's what I'm going to be talking about. So most times, if I make predictions, if I make predictions that the market is going to go this way, and it did not go that way, and it probably breaks out and go the other direction, I really don't get trapped because I already have stop loss that get triggered for me and convert my either short to long or my long to short. I do that all the time. So that's what basically I'm going to be talking about in the next class. So these are my projections. Like we're still going to be bottom bearish for this year. That's my expectation for this year. We can actually, till the end of the year, close to the end of the year, before we have to have a major breakout. Because one of the reasons why we cannot really capitulate and go much down is because of, I think we have an event in November in US. Because as long Bitcoin has been correlated with stock markets for some years now, and if stock market really dumped more, Bitcoin is going to dump off further. And the Fed are currently working against the stock market dumping too much, and because of the election that's coming up in the US around November, right? So between now and November, the stock market might not really capitulate, might not really dump that much, but we can have a capitulative dump between between September and October, to see that then we can actually start getting a minor, not the major bull run, more like the beginning of the bull trend outside of this major downtrend. Then that's when you now start seeing Bitcoin consolidating between this region and this region, between the 30K region and the 20K region. That's my expectation, actually. That's my personal expectation. I'm not saying, like I said, these are probability. Trading is probability. Technical analysis is probabilities. It can change. When it changes, what do you do? Those are the major things. If the sentiments in the market change, what do you do? And if you look at the sentiments right now, look at the current market sentiment, we are really, really bearish. Like people are really getting this. I mean, okay, as at last week it was 6, we got to 14. We're currently at 14. Sentiment in the market is currently showing the fear is currently high. So a lot of people are currently bearish right now. For me, it's the best time for me to buy. Okay, this is like the best time for me to buy. And when I'm saying buying, I'm buying for the long term. I mean for the next 2-3 years, not for short term. But doesn't mean I don't scalp trade in between those long term trading. So if like I said, if you're going to be trading, you must have a trading portfolio and also a what's it called, holding portfolio. For my holding portfolio, I already stored the Bitcoin I want to buy for the next 2 years is already there. For my trading portfolio, my coin is already, those are the ones I have on exchanges that I trade. But my holding portfolio, those are different. I don't even put them here. It's when I want to really dispose them, that's when I bring them on exchange and sell them up. Okay. Was I able to answer your question, please?
Yes, you did. It's quite clear. I think I get what to do now. I just have to hold on. I'm tending to go bullish. I don't like jumping in and jumping out of trade. So it's either I just take a short bear trade for a day or so, and then just watch the market from there. But I already missed the point where it kissed that 200 moving average, and it from that 21, I think 21, 22, 7 there. I can't remember the price exactly, but I already missed that point. So I just want to wait for it. When it does its next retracement back to that point again, I will now enter for another sell, so that I could hold that for. But it's clear. But then before the event around October, November from the chart you just analyzed, is there nothing arranged from the fundamental section that could string up a surprise? Aside the technical analysis, fundamentals also have a way to impact the market. So aside election, which usually have sometimes mostly a negative effect on the market, because most times investors pull out funds to either for safety or something. So is there another core event coming up that might give us a trigger to go to get a bull run in this period? If there is, please share. But if there is none, I think the analysis is apt, because we'll keep having that short bear bull movement. Not the clear ranging point now. The normal, well, it's kind of an expanded range because it doesn't have any major distinctive moves. Before the BTC stopped at 17, I was actually looking at it tanking at 15 before any major pull back up. But when I looked at, I told a friend of mine days ago, I said, he posted on Twitter and said, Taiwo, this thing is going to 15. So let's hold and watch. Then it was at 21, 22, then it did 17. So I was expecting that we would have that that's very major pull up until just today. Funny enough, I've not bothered to check. Until today, I looked at my charts and I saw that the moving average is still pretty above the entire market structure. And I was like, oh, wow, we're still going to be in this dilly-dallying for a while before we get any major breaking out. And then your analysis actually confirms a lot of things for me. But I am also skeptical about major news, if there is any, that's going to come up and then string us a surprise fundamentally.
I think the major news that tends to come around that have been really affecting the market is the FOMC reports on the inflation data, right? Those are
Yes.
actually have been having a lot of effect on the market right now. But like I think I made a prediction last year that we're going to drop to this region, and this is why I made a prediction. Looking at the weekly moving average, there's something I've been saying, like if the only thing that could make Bitcoin go to 10K, one Bitcoin breaks the 20K, 19K region, about this region. I think if you go to let me go to my chat, yeah, this is the region. This region, whatever makes Bitcoin breaks this region, that's the 17K to 21K, and let's say probably might extend to 16K. It's a break of the market structure, right? It's a break of the Bitcoin market structure. Because why? Look at what we have in here. Right now, in 2020, this is the 200 daily weekly moving average. This 200 weekly moving average. Bitcoin broke it and held above it. Go back to 20. If you probably try to draw back, because this chart is not complete, you might not get to see everything. If you draw it backward, this moving average, draw it backward, let's say we have it like this. Bitcoin has been holding that same 200 daily moving average, trading around it and holding it. In the last bear market, actually holds above it for a very long time. I think that was in period between November to March, November 2018 to March. That was on March 2019. It held for that long before we actually start going uptrend. The same thing happened in 2020. We broke the low heat. We both broke it, but held there for about 2 months before we start going uptrend. And right now we are currently there again. So we can. My last analysis was like where I had my private class was like we're going to have is that we have a V-shaped recovery or we have a consolidated recovery around this region. Probably still dump. I dumped around 12K, but it won't stay there for too long before we actually start going uptrend. And once you're able to hold it and hold above, breaks above it for a long time. This is on weekly right now. Then I would say we are ready for the bull run. But if this moving average actually get broken, this is on the weekly right now, then there are other things I might actually get to increase to monthly because that's 50 moving average on the monthly. So if this got broken, then we can start talking about a range around 12K, 10K. But even if you get to break this region, you get to break the support and break it to 10K, you might not stay there for too long. That is why I'm saying, even I already have trades which will be at 12K and 15K. So in case Bitcoin dump to that region, it's going to buy there and probably get recovered. And we can now start breaking uptrend. So those are my expectations for Bitcoin. So as long as we are still owning this major support, this region, this the 20, that's the 17K to 20K, this is the region. As long as we're still owning this region, we're still good. In my own opinion, we're still good. We're still good. As long as we're still holding this region, we're still good. Max we can actually get is to eat around probably 12K or 15K or 10. Let's say max. This is my max zone. That's this region, around 10K region is my max zone. Then we can say that's a very massive break of market structure. Then we can actually start going back uptrend. So this is like the worst case scenario for me for Bitcoin. Let's say around the 10K region is like the worst case scenario. But this is still holding. As long as this is holding, it's still good for me on the long term. That's my prediction for Bitcoin anyway. So I already placed my first entry here. My second entry is waiting around here. My third entry is waiting here. Worst case scenario here. So my first entry is already in. I'm holding it. I already have it since we eat around 20K. It's already there waiting. Second case scenario is going to be around 15K. And third case scenario is around 10K. That's the worst case scenario that could happen. Because if you break this 10K, then that's a break of market structure totally. Then we know that no, this guy might not end up recovering. That's like it. It might end up recovering. But as long as we're still holding these regions, we're still good.
Thanks, man. So, thank you so much.
You're welcome. You're welcome. Do you still have any other question?
Now, no, I particularly clear. You know, once I get the direction of what BTC will do, I intend to easily tell what others can how they can behave because of
Yeah.
its major dominance. Yeah. So once I can tell I can really look at other charts and say, okay, if BTC is at so points, and this other pair is at that point, I could tell easily that, okay, looking at my charts, perhaps I should prepare to go bearish or go bullish. So I majorly focus on what BTC, how it behaves, and then apply to a few other charts that I don't try to trade every other pair. Sincerely, I don't bother looking at every other pair. I have a select few that just major on, and I master their moves over time. So, but BTC leads them. Once I get what he does, every other one I can easily tell what happens. Thank you, man. Thank you.
That's the thing. I think I make that mistake last year by trading too many coins. I made that mistake. It gave me some profits, but I got trapped in the sense that I could not close I have about 200 trades, 200 coins I was holding. It was way too much for me to close. So actually, I end up closing most of them at loss because I couldn't close out. It was too much to close. So it is best for you to minimize your portfolio. Don't hold too many coins. It's very, very important. I think I've made that mistake like twice, but I learned my lessons anyway. Okay. And if you look at what let me quickly do this before we end the class, this section. Look at what we've been having here. So one of the reasons why I'm actually expecting a minor bull trend this net by July is because of what we have a second green candle by August. Then we might test the 200 weekly monthly moving average. Sorry, we might test this 8 moving average. This 8 monthly moving average, because this is going to be extended. And that same 8 monthly moving average is going to be around the same 200 daily moving average. We might test it, and if we test it and get rejected, then that is when the last dump I was talking about in September will occur. So when it occurs, then we can actually have the possible breakout. That's my expectation. Like I said, whenever you see the candle breaks and hold above this 8 moving average, if it closes above the 8 moving average, you wait for the next candle and it still closes above it. It's a bull run. It's a bullish trend. And if it closes below the 8 moving average, that's on either daily, monthly, weekly, wherever, it's a downtrend. If you look at what happened here, when it closes below it, as long as it's unable to close above it in the next candle, it's still going downtrend. So we might actually come back to test again before we actually get rejected. I mean, if we get rejected, I won't say we will get it. If we get rejected on this candle again, after testing this 8 moving average, then that is when we're going to have the last dump before we actually get to have a major breakout from the daily or weekly or monthly. That's my expectation, actually. So if we get to have that, it's really, really good for Bitcoin to really hit around 30K region. That's possibly Bitcoin hit around 30K region. Most people are going to be probably start following in, thinking we are done, we're going uptrend. But we might not be, except we break it. As long as we didn't break it, it's still going back down. Okay, that's just my projection for the next till end of the year, basically. Okay, I think that is my my 2 cents today. Thank you, Jeffrey, for your input and questions. I really appreciate them, and I really hope everybody has been able to gain something from it as well. So, do we have any question before we head to next lesson? We're already rounding up. If you have any question, you can drop it on the group. I'm going to respond to them from there. Okay, but I'm going to make this recording available on YouTube for the end of the week. And don't forget to practice. It's very important you practice. Sincerely, no matter what you learn from the class, if you don't practice them, it's more like you just watching the tutorial class. You're not going to have anything to do with it. It's not going to benefit you. Just watching or attending without you practicing. So that's it for me tonight. Thank you all for joining. Welcome, Elvis. Okay, seems like you have a poor network. Thank you all for joining, and do have an amazing night.
All right, thank you.
Thank you. Good night.